This is the second of my two-part latest update to my stock market trend forecast for 2019. Also note that the whole of this analysis was first made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $3 per month. Clearly August had seen a significant deviation from the trend, trading down to 25,300, which is significantly lower than the 26,500 I thought would hold any decline during August. The Dow currently stands at minus 4.5% against the forecast trend. This analysis will update on whether it's possible for the Dow to converge to the trend forecast, i.e. red line, towards a late September high of 28k, which with 3 weeks to go is definitely a tough ask. Technical analysis. The Dow continues to put in a series of higher lows and highs. However, the pace of advance has slowed, with the most recent correction about 1,000 points deeper than it should have been, which suggests that the market is gearing up for a stronger down move later in the year, i.e. October. Spot is at 25,500, 24,750 and 24,000, which suggests a failure for the trend to resume could likely see the Dow trade below 24,000, whilst resistance is at 26,400, 26,750, 27,000 and the last high of 27,360. Trendline support is at 25,700 and rising to 26,000 by the end of September. So the Dow has some room to correct down to 26,200 if it chose to, without altering an overall bullish picture. Elliott Way of Analysis. My last look at Elliott Wave proved accurate, so it remains unchanged. i.e. we have had a wave 4 correction, which should set us up for a fifth wave advance to a new all-time high by late September, early October. MACD gave a bearish signal when it broke below the uptrend line. Suggests that the stock market is weakening, though marginally oversold in the immediate term, which suggests the Dow should trade higher during September but fail to reach its all-time high. Seasonal analysis. August was supposed to be a positive month, while September is expected to be a weak month. However, we clearly have some sort of inversion going on here, which suggests that as August was weak, then September should be stronger than seasonal expectations. Therefore, in seasonal terms, my adjusted expectations are for a strong September, weak October, strong November and December. As for how strong and weak, well, I'll determine that in my next analysis due late September. US interest rates. As expected, the US cut interest rates by 0.25%, which is confirmation that the Fed will do whatever is necessary to avoid a recession in 2020, which translates into blowing asset price bubbles. That should be bullish for stocks and the US housing market. So in conclusion, an inverted yield curve, recession warnings, trade wars, climate change, all that, and the Dow's only down 4% from its all-time high. The Dow peaked at 27,359, last close at 26,403. So the Dow is less than 4% from its all-time high, a fact that the perma fear-peddling mainstream press and most commentators don't or can't seem to grasp. Especially the perma bear variety, you'll see a bear market in every correction. Okay, yes, we've had a correction, and it was a couple of percent and a couple of weeks longer than I thought it would be. 4% is nothing. In fact, if the market was to give me an unexpected correction, then I would have much preferred something like 8%. At least then I can do something with it. I buy more AI stocks at a discount. 4% is nothing, folks, nothing to worry about. So what's likely to happen next? This analysis suggests that the Dow should have another run higher at its all-time high during September, i.e. target a break of 27,360 before it can reach 28,000 by perhaps early October. However, more probable now is that the Dow is unable to break above 27,400 and turns lower for October with a double top pattern of sorts. So in conclusion, in terms of the bull market, nothing much has changed. We're still trending towards 28k, even if we fail to get there this time, i.e. by the end of September, ahead of a weak October. Likewise, expectations for later in the year remain largely intact, i.e. a Santa rally towards Dow 30k, the prospects for which I will seek to update towards the end of September. And peering into the mists of time. Don't forget, we are in a bull market. What bull markets do is to trade to new all-time highs. The Dow last traded at a new all-time high on the 16th of July. As long as the Dow continues to follow this pattern of corrections followed by trends towards new all-time highs, then there's nothing to worry about. Sure, we'll get wild rides at times of as much as 20% down, but 4% is literally nothing. Until that pattern for new highs fails, just buy the target stocks when the opportunity presents itself and let the perma crowd worry about bear markets always being just around the corner, as this stock's bull market, driven by multiple mega trends, continues to climb ever higher 2019 to 2020, 2021 and beyond. And remember, the whole of this analysis was first made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $3 per month. And subscribe to this YouTube channel for the next video in my analysis and forecast series.